Back in this video, I'm going to be giving you my thoughts on the new Bank of America price target for Palantir. It came out last week. I'm going to be sharing the context you need to know, as well as what must be true for this to occur. So here are the timestamps. Feel free to jump around. I want to share the bottom line up front, which is Bank of America believes Palantir has the so-called secret sauce to make it to $215. And here's where the current analysts are sitting. This is a street high. We have Wedbush at 200 and the rest down in the 180s, 170s, where the stock is currently trading. Some a little more bearish like Morgan Stanley and Goldman Sachs. So this is a call for about $30 of upside over the next 12 months. These are 6 to 12 month targets that these analysts put out. And here's what they actually said. There are basically 5 reasons for this price target and call out. The first is what they saw at AIPCon 8, agentic forward deployed engineers as a go-to-market differentiator. And they see commercial sales greater than $10 billion by 2030. With the growth cadence of over 40% growth in 2026 and around the same in 2027, justifying a premium multiple on accelerating near-term growth and durable long-term growth and profitability. So the consensus price target is around $140 for the 21 analysts. We have a high from Bank of America, a low at $45, and the consensus rating is a hold, a handful of buys and sells. So let's take a look inside the $215 price target logic. It's really not about this quarter or next quarter. It's about the compounding thesis of this company across product, go-to-market, and valuation. And agentic AI is compressing the time to value. In these forward deployed engineers, the way Palantir is able to use AI to actually do the setup, the consulting work, if you were to say so, is driving seat expansion and account density. Today, we're analyzing the future of Palantir and the direction of the stock price. And a lot of that has to do with what's currently happening today with flows, positioning, and who's actually buying PLTR. For help in understanding that whole landscape, I use Moomoo, the multi-asset research and trading app with over 26 million investors. When a catalyst hits, I want to move fast. In Moomoo, I can jump from the price chart to the options chain in a tap and map positions around events, earnings, big contracts, or index moves. And when the narrative shifts, I want to see the receipts. The institutional holdings tracker makes it easy to see which funds are adding or trimming around headlines, which is super helpful for sanity checking the story. US users get $0 commissions on stocks, ETFs, and options, plus $0 contract fees on equity options. And there's also a timely promo. US users can get up to $1,000 in NVDA stock with qualifying deposits through September 25th, and up to an 8.1% APY cash sweep for 3 months. Hit the link in the description to try Moomoo and get the current offer today. Top line stamina is looking great. We talked about these numbers. I'm glad to see Bank of America is bullish on the growth continuing and not tapering off. As for the premium multiple, this is another point of contention, and they say Palantir deserves its premium multiple, which is also fantastic. And the market should tolerate its richer EV to sales and price to free cash flow, so long as the fundamentals stay in line. So what is the pushback from this call out? Why is the consensus still so far below $215 a share with a hold stance? So valuation, some brokers just can't stomach it. That's unfortunate for them. They think there's going to be a reversion to the mean of AI multiples, so they're going to haircut the multiple even if growth is strong. I think that's just a flawed way of looking at it. There are some people who are still skeptical about commercial scale out beyond the government business, which is also a problem if you're trying to get a good price target. And then execution. I think this is a fair one. It's going to be difficult to execute at the rate Palantir's been executing for the next 10 to 15 years. So it's easy to say they're going to slip up at some point. But again, you got to think from first principles. I think all of these pushback points aren't really doing that. So what to watch on the next 1 to 2 quarters? Commercial momentum, as always, the net new logos and expansion. Is that consistent? with what Bank of America is looking for, agentic AI, how they're able to produce these case studies and sell it to more and more businesses, and operating leverage as margins continue to expand. So the way I'm looking at it is Bank of America is underwriting that agentic AI and forward deployed engineers are going to enable this commercial scale and operating leverage that justify the multiple, and it's only up from here. So execution over the next few quarters, especially on commercial and leverage, are going to decide which side is going to be correct about this. The bears, where they think this stock is $50 to $100 per share in 1 year, or the bulls like Bank of America that say the story is just getting started. So I'd love to know what you think about this. I've got many more great videos to come. Until next time.